Hello, everyone, and welcome back to the Velocity channel where we bridge the financial freedom gap. Listen, today we have a spectacular show for you today. It's going to be an impossible scenario that was sent to us by shout out to Jesse, all right, for bringing this to our attention, and we need to address it. But before we do, please like, share, and subscribe so that you can get this freedom to everyone that you know, okay? Because listen, it's only the truth that you know that'll make you free. All right, so this was given to me. It's going to be a negative cash flow scenario. And what I'm going to do is I'm going to show you the scenario, show you the impossibility that people have within this scenario. I'm going to show you what options that you have, right? And then we'll go ahead and show you how to solve this for you, okay? And then we're also going to dive into how you should split up your expenses, which is going to be humongous going forward, okay? Are you ready? All right, so here's the scenario. $2,400 in income. That's right, you read it right. Expenses is $4,000. Now, this isn't just one time, folks. This is ongoing expenses, all right? And I know this seems impossible, but just stick with me, okay? You have a cash flow of negative $1,600. Can we just look at this for just a minute? Okay. And I know you think, man, my goodness, well, how are we going to get out of that? Okay. So you also have a credit card, right? That you have not used. And that credit card is $1,600. Well, CJ, that wasn't really a comfort at all. What are we going to do with this $1,600 credit limit? I tell you what you can do. You can ask for a limit increase. Okay, and let's say they increased it to, what should they increase it to? Help me out. What should they increase it to? Should they increase it to, let's say, 14 or 4,000? Because remember, you weren't always like this, right? Perhaps this just came up, okay? I'm not saying you were like this for like years, right? I'm saying, hey, what if this just came up and you need to do something? You need to do something right now. Let's go ahead and ask for that credit limit increase of 4,000. You say, well, man, I got a secured credit card. Well, ask for a what? $2,400? Let's put that $2,400 in income. Let's add it to our secure card. Let's ask the bank, hey, can I add $2,400 to that? That'll equal the same amount, $4,000 in your credit line. So what does that mean? Well, you can put your income now, right, inside of this, which adds it up to $4,000. And what are you going to be paying from? Are you going to be paying from your checking account? How? You don't have it. You're going to be paying from your credit line, all right? Remember, credit card is your credit line. So the $4,000, you're going to go ahead and pay that, right? And this is why I say that owning a business is the greatest tax strategy in this nation. Why? Because you can write off the losses. Now, listen, make no mistake. I wish there were less losses. I really do. But I do want you to know that writing off the losses is a thing. Please get with your CPA or get with my CPA or get with some CPA that knows what they're doing, that knows how to write off those losses. All right. Listen, I know friends, man, they live on losses. So I would be much more happy, right, for you if this was a business scenario, right? So listen, this is what you need to do. Get yourself a business, all right? And we have the description links below, man. If you need help with that, don't worry. Because, the purchase for your business could be a write-off. Even some of the dinners that you go out on, some of the meetings, these expenses that you accumulate in your business, they can be written off, right? And not only that, what if you had a business credit card that you could write off these losses to? Is that possible? Oh, man, there's a lot of things that are possible that was hidden from you and I. Okay, so look, that's a quick win, right? So we're talking about $2,400 income. The expenses is $4,000. This is negative cash flow, folks, $1,600. But you know how we got solved that problem, at least for that month? We added to our credit card so that we can at least for one more month get these expenses paid. Now, if you say, well, CJ, but I need some more months. Okay, all right, David, this is for you. What about your IRA? Can you take a loan from that? Can you take a loan from that? Can you take a loan from that? Now, look. I'm not saying you're going to be here forever in this state. Do things happen in business? Yes. Do things happen in life? Yes. That's why we have accounts like the IRA. That's why we have accounts such as maybe you have a savings account. Maybe you have, And man, it would be way better for you to have the Money Max account, because that way you can plug these numbers in and you could work it all kinds of ways, right? So that you can have the best outcome for you, right? Not only that, right? But we also have, oh man, get ready for this. If you've got the IRA, right, you're going to pull that money out. Perhaps you're going to get a secured card from it, right? You're going to be paying the expenses. But remember, folks, there's also what? That whole life insurance, right? That permanent life, okay? You've got that as well. Now what we're going to do is we're going to get into the expenses and see which expenses you should cut, all right? Now remember, you know that there are things such as the protective expense, right? There are things such as the destructive expense. You know what? That's much better. So the protective expense is going to be things like your insurance, right? Automobile insurance, we don't want that going away. Permanent life insurance, there's so many things you can do with the right permanent life insurance, folks. If you have any questions on that, let me know, all right? Because, for all intents and purposes, it can definitely be way better than an IRA. But in destructive expenses, listen, folks, I know IRAs are good too, all right, when used correctly. Destructive expense, that's those gym memberships that you don't use, or any membership for that matter that you don't use. Productive expenses, this is things for your education, right? Perhaps that's in your business, right? You need those expenses to operate that business. And listen, every loss, right? Think of it this way. Every loss is actually just the cost for tuition, because you're learning, all right? It's not the end. I showed you some options, right? Lifestyle expenses, these things for groceries and different, hey, you want to go on vacation, you want to live a certain lifestyle. Listen, man, those lifestyle expenses, they're important to you, right? But what we want is we want to get rid of the destructive expenses. We want to get rid of the destructive ones. So what are some expenses that we can go ahead and say bye-bye to for now, right? Those gym memberships that you're not using, those subscriptions that you're not using, okay? You're not using them. Let them go, right? Free up that cash flow to pay down those debts, right? Because that negative $1,600 scenario, listen, we don't want to stay there, right? And doing this, right, with the expenses is how you get out from under that, all right? So listen, we talked about how you can get rid of that scenario at least for 1 month, right? And then we talked about how to come out of it. Business, get yourself a business, get those tax write-offs going, get a good CPA. And then we talked about some expenses. You can eliminate the destructive expenses, pay right into the productive and the protective, and be wise on that lifestyle expense. You do not want to get rid of your productive and your protective expenses. Shout out to Gary Gunderson for teaching us that. Listen, folks, thank you so much for your attention today. Listen, don't forget to like, share, and subscribe. Get the class, right? Velocity Banking 2.0 if you haven't got it. And please book a call with us, because we want to see if you even have expenses for $4,000. You may be putting it in the wrong location. We don't know that. Get with us. God bless you, and you guys have a good one.